How to size your deal using fix and flip funding. Okay, so what is fix and flip funding? So really what it comes down to is, what's your experience? Do you own any rental properties? Have you done any fix and flips in the last 36 months? I would say one thing I get reached out to a lot because I have a lot of investor contacts in Indiana, and the smaller deals are harder to fund. Most of the nationwide funding sources want an as-is purchase price of $75,000 or higher than your rehab budget.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio.
Hello, and welcome to another episode of the Investor Financing Podcast, and I'm your host, Beau Eckstein. Today, we're going to talk about fix and flip loans. How to size your deal using fix and flip funding. Okay, so what is fix and flip funding? It's a short-term loan that oftentimes gives you a percentage of the purchase price and the rehab budget. So you're looking at borrowing 80 to 90% of the purchase price and 100% of the repair costs. Now there's certain kind of thresholds and guidelines. So I often get asked, well, how do I get the best pricing? How are these deals analyzed? So really what it comes down to is, what's your experience? Do you own any rental properties? Have you done any fix and flips in the last 36 months? What's your credit score? We start there, and then we look at the property. What's the purchase price? What's the renovation costs? And what is going to be the projected ARV, the after renovated value?
You're listening to the Investor Financing Podcast. We'll be right back after this break.
And now a word from our sponsors. Want to save money on your taxes? Cost segregation is a strategic tax planning concept that saves money by deferring federal and state taxes through accelerated depreciation. Get a free benefit analysis today. Please visit costseghub.com for more information on cost segregation and all of our cost recovery services that can put more cash flow in your pocket.
So most of the guidelines keep you at 75% of the ARV, right? And that's usually done by a subject to completion appraisal. That's how they determine the future value of the property. So there's national fix and flip lenders, and there's also local fix and flip lenders that are more of a smaller fund, or they actually sometimes will fund the deal and then sell off the note to like a private investor, like an individual investor. There's a lot of ways to structure these. National funds, however, who are making the majority of the loans from a high level perspective, they have a certain buckets that you have to fit into to get these fix and flip loans. One is they look at your experience, your credit score, they do a background check. They typically make loans only to business entities, LLCs, corporations, etc., not to the individual. However, most of these loans do require you as an individual to sign a personal guarantee. Anybody else in that business entity that's applying for the loan that has a greater interest in that entity of over 20% also needs to complete an application. That's typically how they're sizing these. So you need a good construction budget, your track record in a spreadsheet, your verification. That's always good to have. I've done 10 flips in the last 3 years. I've done 2 flips in the last 3 years. All that in a spreadsheet is always advantageous to get the best pricing. Then you need a line item construction budget where it's detailed out, demo, whatever you're doing at the property, a nice detailed. If you have examples of recently completed projects, that's always good too, because sometimes when we're doing this subject to completion value appraisal, it's good to send those to the appraiser saying these are what the finishes are going to look like in this new rehab project. Most of the lenders allow for a gross loan amount not to exceed 75%. So when you're factoring of the subject to completed value, so when you're factoring these flips, just keep that in mind. So you can get up to as high as 90% of the purchase and 100% of the repair costs. That's usually for somebody that's got experience. If you don't have experience, you might be limited to 85% of purchase, 100% of repair costs. people with more experience get better rates because they're less of a risk, or perceived risk at least. So that's how the pricing works. Now, here's some additional tips. If you are doing a rehab project, let's say where you're buying the property for $75,000 and it needs $100,000 in rehab, that's where we call that a lopsided flip. And most lenders aren't as aggressive on those deals because it's more risk, right? You're buying the asset for 75, but the rehab is more than the purchase price. Most of the lenders like to see a purchase price of X and then a construction budget of about 40% of that at the high level. That's kind of more of like a moderate flip, right? Obviously, there's developers out there that are doing complete rehabs and additions. So there's different lenders and funding sources that have appetites for those type of big value add projects. And different lenders have appetites if you're doing multifamily over 5 units. Small multifamily 1 to 4 typically falls under the same bucket as the standard fix and flip programs. But it's really not that hard. I would say one thing I get reached out to a lot because I have a lot of investor contacts in Indiana, and the smaller deals are harder to fund. Most of the nationwide funding sources want an as-is purchase price of $75,000 or higher than your rehab budget. They don't want to do these $30,000 and $40,000 deals. Unfortunately, that's where the localized hard money funds or the private investors are really beneficial. But if it's an asset 65 and greater and you're going to put 20 or 30 grand into it, that's fundable, but they don't like the small deals. Essentially, they can get done. It's just a little bit more challenging. So I hope this explains a little bit more about fix and flip financing. As always, feel free to comment, message, hit me up. Hope you enjoy these short episodes. Please subscribe and like this video and leave a comment. It helps with the algorithms, and I'm trying to get my content out to the masses. All right. Have a great day, guys.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.